Jamie here, JB here. Hope everyone's doing outstanding. Friday, September 5th. Happy August Jobs Report Day if you celebrate. Talk really quick about the market. Some names I'm looking at go from there. S&P futures in the green, rallying after the jobs report this morning. S&P is about up core off 0.4%. That's on the heels of yesterday's over 0.8% rally. Uh, yeah, interesting. So just quick on the jobs report. So the worry, and it's funny, people were weighing in on implications, right? And the more I thought about, like a hotter than expected jobs report, like 150,000 jobs created, unemployment rate down ticking, I think the market would tumble. And some folks were thinking the other side, that if the jobs report came in hotter than expected, markets would rally, and if the jobs report was negative, minus 100,000 jobs created, unemployment rate upticking like 4.4% or whatever, that the uh, markets would fall. And in my head, I think it's like the bad news would be good news. And you don't want too bad news, right? You don't want to see the job market get destroyed. Then you worry about, other implications and down the road. To me, it's like this was like, I wouldn't call it Goldilocks, but slightly lower than expectations. 22,000 jobs created versus 75,000 jobs estimates. And then the unemployment rate upticking at 10%. So nothing crazy, like enough to give more credibility to what Fed Chair Powell said at Jackson Hole, and then enough ammo for the Fed to cut rates without any kind of argument. I mean, if you're bearish or you'd hate the tariffs or all the things going on with the economy, then you could say we can be in a situation where if the Fed's cutting rates and inflation still is high and ramps even higher, you're going to get into a situation that's going to be very hard to unwind, right? I mean, the Fed can go back and start raising rates again, right? That might fix it a little bit, but it might be kind of like a snowball, and that snowball will turn into an avalanche. It'll be very hard to stop. So that would be the argument there. But I use this analogy too, where this thought process that back in 2008, when we had the housing crisis, the Fed, the rate was 4.5%. Well, I mean, 2.5%, 2.25 to 2.5. That's somewhere in there. And we're 4.5%. So there's room there. Even when we got down to 205, we're not at the 2.5. We're not at the 2008 threshold. So, and back then in 2008, rates were 6% anyway. So it's like we're in the same kind of boat. And then you know what? There's the housing market. Supposedly they might call some kind of housing emergency because of the cost of housing. Like that, just you could just if it spurs more asset. You hate to see assets go. I mean, housing prices in some areas still at all-time highs. So, it's just some balance here, but you have to think that maybe this helps spur the thing, at least get rates going down in the right direction, which they have been over the last couple of days, and then you know doesn't create too much of a bubble in markets, and then you kind of can stay strong. That's kind of hopefully best case scenario. So nice chart here. This is on Market Watch this morning. This story around CapEx spend, which has been a story for a while. It's like everybody's waiting for the next shoe to drop. When is CapEx going to end? CapEx spend. So estimates and every earnings cycle so far this year and even last year, it seems like every time Meta or Microsoft or Google, Amazon all reported earnings, they kept ramping up their CapEx spend in regards to AI, right? So it's just great chart to see like the estimates coming in 2025 and then exactly what those uh, growth rates on CapEx spend has been. And now you look in 2026, it's like people are waiting for that to be zero growth, right? All the CapEx spend is done, and that's probably not the case. So is that the next leg of higher highs for the markets? It's certainly possible. And everybody looks at all the traditional names that help power the market higher, like retail, consumer discretionary, energy, all those different names. And maybe it's just a rebalancing of things to propel markets to new highs. We'll see what happens. But I was cautious heading into this week. When I say cautious, like to me, I have to have conviction in direction and market. I would say high conviction, but at least not be open for some kind of pull. And coming into today and this week, similar to going into Jackson Hole, I was kind of like on cautious, right? And I still somewhat remain cautious, but I think this kind of at least will help mitigate concerns that the Fed is not going to cut rates in September, become hawkish, and then the market starts to give back some of the rally, yields start to head back higher. So I think this, again, jobs report this morning, like a best case scenario. And earnings season's winding down, historically weak month in September, and maybe that changes. So we'll see how today plays out. I didn't have a range for this week, but you got to watch upper Bollinger Band 650-110 on the SPY. So maybe that could be like a magnet today. Maybe it might provide some resistance support. We'll see. And then I think it was 649. Well, 649.12 is the close. So watch that. Maybe we go green to red for a minute, find support and bounce. That would be ideal. And then take a look at yields. 10-year yield is down to levels not seen since, actually right at the end of April. And then we're nearing those Liberation Day lows. So we'll see how this all plays out, but cautiously optimistic heading into the weekend. Great. I mean, if you had to give a possible scenario for the markets to react on a jobs report, the jobs report this morning was like the ideal scenario if you want the markets to at least hold its footing, stay high. All right. Quick individual names, Servo Box, not going to talk too much about, but last time I got the calls and when the stock held 975, those paid out handsomely. So we'll see here today. It's gapping over $10. If it holds 10 here in the morning, I might start looking at the December and or January strikes. 15 calls, 16 calls. Nothing's changed in the story besides the stock price going down. I still have those October freebies as well and September's. IIPR, solid day yesterday, up 3%. No news or catalyst. Actually, midday, like around 11:30 or so, the stock went from 55 to 57 in a flash. So 57.50 is the big spot. Same story. If it holds its gains here today, gets to that 57.50 handle, I might look for some strikes, either October 65s or either go out to December and January. Keep saying, don't forget, there's an ex-divvy of $1.70, so that comes out of stock price, so I might skew some of the later dated calls, so people be aware of that. A Reddit type Bollinger Band setup. Again, another day yesterday, I'm staring at the calls and just the premiums, it's implying a 5% move with less than 2 days expiration. So even if it melts in the right direction, it makes it tough to trade. I'll be watching it today. It's at 237. Typically it has a rally right out of the gate, then a pullback. So maybe I'll try and do that pullback and play it for a bounce if that happens. Type Bollinger Bands. I think 250 is going to come. If not today, maybe next week. And then Pool yesterday. Nice rally. They were at presenting at a conference, Jefferies conference this morning, yesterday. I think it's at 9:30. I don't know what time they presented. I don't see any analysts changes for today. So I don't know if there was an adjustment. It looked like I don't know if it was rallying on that or just the fact it's like a rate sensitive name. I talk about Pool a lot that, people, when they look to get that large of addition at their home, it's not like they go and pay cash. I mean, some people do, but most people are going to finance it, right? And then if yields go down, obviously it becomes more attractive to create that, to add more value to your home by adding a pool, right? So we'll see. Need some continuation here. Obviously need a big move for my calls, but if it does break 320, might look for some more strikes depending on risk reward. LULU, thankfully wasn't in calls into earnings. Some of the reason kept out was the high premiums. I kept tracking the 260s yesterday. I'm like, but they were like 60 cents. You need a 15% move. Sure enough, it's doing a more than 50% move to the downside. A beat on earnings, missed on revenues, and then their outlook was horrible. Well, not that good. And then the commentary from the CEO on the conference call was horrible. And I was mentioning on the rant the last 2 days in regards to the parallels between possibly Lulu and Under Armour. Under Armour back in the day, like 2015, the stock was a cult name, right? They had a premium pricing on their products. It's just apparel, so the costs are low, so you can have high margins, high growth area. They were growing revenues like 1 billion to 5 billion, and then they just plateaued, and that was it. And then it became like a value name. So Lulu, I'm not saying the same thing, but it's like they're like, oh, we should reinvigorate. We should have more lines coming out. And things. I'm like, why are you saying this on a conference call, right? People don't want to hear what you should be doing. You should have been doing it then. So that stock, maybe this is the last time it ever saw $200. I'm not going to rule that out, but I'm certainly not playing for a bounce. On the flip side, like a name like Nike, right? I mean, I haven't traded this one in a while. It's sitting here at 74.75, kind of like a sympathy move on Lulu, but it's like, here's a name that's kind of weathered all those storms in regards to margins. It has a new leadership, so that might be a name I kind of put back on the radar as like I would say a pair trade, short Lulu, long Nike, but it's like, here's a name that maybe that starts to get going. It's right near 75 or so. So maybe he trades in 80. So that's a name I'm putting back on watch. Hasn't been on watch for a while. And Joby, right? Joby under 13 yesterday for a little bit, then bounced, closed over 13. Maybe this is a sign of a bottom. If it holds 13 here today, might be the chance finally to add some strikes either in December into January for the play for that move 18 plus and back into the 20s. And that's it. Sorry for the late rant. I'll be back on audio later. Rock and roll.